Alright, hi, hello, hi everyone. Welcome back to Lighthouse. This video. Alright, thank you. Appreciate for you watching this video. Alright, I know I has been away for quite a while. It's nice to be back. Thank you again for watching this video. Alright, we're gonna have some changes on this channel. Alright, the key first thing that's going to happen is I'm going to kick off a new initiative on this channel itself. This is the first video that you're going to see me see my face, see me recording. I decided to step out of my comfort zone and decide to actually be part of the video. Alright, and the second thing is we're going to have a few things to kick off. I think that is going to be pretty interesting. I'm going to kickstart is I'm going to start this thing called the Lighthouse Academy. Instead of just talking about the stocks and share on a daily basis or on a weekly basis, I'm going to kickstart this academy series to actually share about the basics of how actually investing is, some of the technical and theory part of investing, so that for some of you who are new to investing, alright, particularly I would like to help people who are actually new to investing to look at some of the information or some of the knowledge that I have learned and gained. I would like to share it with you, right, so that through this video you are able to actually create an interest and start investing on your own. Hopefully that you can using this information that I share to actually build a wealth. But most importantly, with this video will help you actually to kickstart your investing journey, alright, and along the way to seek out more courses, more knowledge, read up more books, watch more other YouTube videos to actually increase your knowledge on investing, gain more experience on investing. After that, able to build a wealth on the long run and achieve the kind of goals of financial freedom that you want eventually, right? Okay, so without further ado, let's get started in it. Of course, there's another thing just before we start. All right, this is the YouTube channel you're looking at. So if you are first time into this channel, please subscribe to my channel itself. Just search for it, Stock Lighthouse. All right, just remember to click on the subscribe button, click on the bell button beside it so that you are notified every time when they upload a new video. Alright, so every time with a new video like this economy series, or I'm thinking to start another one after this, will be to continue to do the weekly video series. Alright, it's either on a Saturday or a Sunday. I'm still thinking about it, to do a market update on what's happening in the US market and some of the stocks that I will be looking at to see that is when there are some potential in them. Alright, okay, with that, let's get started. Alright, so same thing, disclaimer, whatever you see or I mentioned in this video, right, it's all about stocks investing, option investing. That's what I do. But none of the things that I said are actually any form of recommendation. They are just purely case study for sharing and education purpose. Alright, so please do your own due diligence if you desire to take any actions on any of the things that I mentioned. Alright, okay. So for this first video, I make this video for all those people who are actually new to investing. Alright, investing, how to begin with, and I think it's really simple, and it's just 4 simple steps for you to get started in investing in the stock market. Alright, okay, but the first thing first, you need to understand why are you investing. Alright, that's the most key, crucial and important thing. You need to understand why are you investing, and the common reason most people have for investing is they're actually looking for ways to make their money work harder for them. Alright, so that they can grow their wealth a lot faster. Right, and second thing, like I said, is just to actually grow your wealth on the long term, so that you can actually accumulate more while you're actually spending time on other stuff over the years, right? Okay, and most important thing why people actually are looking to invest is because they want to own assets that actually generate passive income for them, so that they can free up their time to spend the time with their loved one or do something else and pursue their passion, right? So what can you invest in is the next thing we need to find out. Right, in the whole investing world, there are a lot of different platforms or different instruments you can invest in to achieve the wealth or the goal that you have. Right, some of them might suit you, some of them might not. I just run through the big picture and spectrum of investment instrument that you can look at, but it's at the end of the day, it's up to you to actually venture and experience which are the platform that is most suitable within your risk appetite, as well as able to actually achieve the kind of goals and result that you want eventually at the end of the day. Alright, so some of the investing instrument actually people look at, most people actually started, and the most low risk will be one of them will actually be your saving plans or fixed deposit. That's most what the banks will do. People just put money and save with the banks, right? If not, you can actually do bonds, slightly higher risk, but they are not very risky in that sense. Basically, you are just loaning money to either corporate or to the government, and they will just pay you coupons on a monthly basis or quarterly basis, right? Okay, the rest, some of you actually will actually look into investing in mutual fund, or some country call it unit trust, right? A more adventure one will go into stocks and share, exchange traded fund. If you don't like this kind of paper liquid kind of investment, some people are actually going to real estate, right? And will actually uses a slightly a larger capital or a bigger sum of investment instrument they look at. Of course, there are still people who like to enter real estate but doesn't have so much fun. They actually going to reach real estate investment trust, where they actually invest just like a stock and share, just that they are catered to underlying shares. They are actually looking at all the real estate properties, right? But of course, beside that, some people actually like to do forex exchange, in short forex, right? Actually, they trade the currencies. Some people actually look at commodities like trading in the coffee, sugar cane, similar etc. kind of instruments. Last but not least, some investors are more sophisticated. They actually like to go for exotic investment. For example, they like to invest in trades, into cars, painting, watches, wines, etc. Right? So it depends what you actually like to invest in. Every instruments have their pros and cons, the advantage and disadvantage, the risk involved, the method and philosophy behind every instruments are different. So you need to find out what actually suits you for your investment style, for your risk appetite, and to achieve your goal in the long run. Alright, so for this video, we're just going to focus on stocks and share and ETF itself. Okay, right, so what is stocks and share? Well, or rather, what's the stock market? Alright, okay, but before we actually delve into this, I want to ask you another question. What is a fish market? Alright, if you just Google fish market, most likely you're going to get a picture similar out of it as this, right? You just see someone is selling fish display there with some price and things like that. Most likely it's going to be, alright? So the question you need to ask is, how do you actually buy in the fish market? Alright, and it's just very simple, right? You choose the freshest fish that you can find that you want to buy, avoid those bad ones, smelly one, alright? And hopefully there's some sales ongoing, or that lady or the uncle that's selling you the fish are in a good mood that actually you are able to actually buy at this cheaper price, or buy at a discount. It's just that simple, right? Similarly, let's say you are looking at the vegetable market, right? What do? When in the market, you just look at all the vegetables, alright, all the fruits kind of thing. So you just see where are actually the prettiest one without any rotten corners, or part of it is spoiled or was beaten by any insects and stuff like that. The same thing to how you buy it. Just avoid or choose the freshest vegetables and hope that you buy it at a discount or at a cheaper price, right? America say. So how about the stock market? So if you Google search stock market, I'm pretty sure highly likely you will see something like that. Alright, just rows and numbers. So is stock market really about the rows and numbers? A lot of people would be thinking, stock market is just about going up, the price going up, the price coming down. That's all it is. But actually, in fact, when you invest in the stock market, you are not just looking at the numbers. Alright, you are actually looking at real businesses. Alright, all these are businesses that are running and operating, and they are listed in the stock market, so that investors like us, we can actually take part of it and invest in the business. Alright, so it's also very important to choose the right business to invest in when you come to the stock market. Alright, of course, when you look at the whole stock market, I mean, this is one of the websites that I use to find companies. It's called finviz.com, right? So if you look at finviz.com, you just go to the screener tab, you'll find out that in the US market alone, there's more than 7,000 stocks or companies that you can invest in. Wow, 7,000, isn't it crazy? There's a lot of company to look through, right? So the question you ask yourself is, so which one should you invest in? Am I right? Right, so that is one important question. Or in fact, by just looking at this number, it actually has stopped a lot of beginner investors to want to start to invest in. Because how do I choose? And I'm just talking about the US market is 7,000 over. What about my own local market? What about my neighboring country market? It's easily more than 10 over 1,000 companies to look at. Alright, so for the beginner, Alright, for new beginner, to make it simple, really simple for you, my opinion is the best is to invest in this instrument called the exchange traded fund. Alright, so basically what's an exchange traded fund? It's just a basket of company that is within the fund. Alright, and one good example will be S&P 500 index fund. So basically what this simple S&P 500 is a basket of fund with the top 500 companies within this fund. So when you invest in, let's say, this S&P 500 index, you are technically investing a part of all this whole 500 funds itself, right? Isn't it wonderful? Right? So most people, why actually they look, or rather beginners to look at investing in the exchange traded fund, firstly is because it's diversifying, and by that it means that you reduce your risk, right? So instead of investing in one company may go bust, right, if you pick the wrong one, right? By investing into a basket of companies, very unlikely the whole companies, or rather all the companies in the ETF all go down at one shot. Okay, it doesn't mean that it won't happen. It depends on what kind of ETF you invest in. But if you invest in very strong companies or very strong fundamental ETF, technically the likelihood is really very low. And you also get to invest in expensive company at a fraction of cost. For example, if you're looking at investing in Amazon, which is $1,000 over, you're looking at investing in Google, Apple. Google is in thousands as well. Apple is a few $100s. No, it's very, very expensive if you are a new beginners with limited funds. Alright, so investing in the ETF allows you to invest in all these companies at a fraction of cost, which actually make it a lot more effective for you, right, and easier for you to enter into the game. Okay, and the other reason why most people actually like to invest in ETF is because it's minimum management on your side, on your portfolio. Okay, what do I mean? That if you invest in individual company, and let's say you invest into 10, you need to manage the whole 10 companies by yourself. But if you invest in the exchange traded fund like this, for example, S&P 500 index, you don't really have to monitor each individual company by itself. And there's no way you can manage and look after 500 companies at a go. So just by investing in an ETF itself, right, you are actually diversifying, and the portfolio, or rather a fund manager, will actually manage this 500 according as it tracks the S&P 500 index, right? You don't have to do anything. Pretty much you are hand-free from it after you invested it in, right? And that is what most beginner investors would like to look at. Minimum research you need to do, invest in very strong company, all right? And it doesn't take up a lot of the time, all right? So what kind of ETF you should look at? Because by ETF itself, there are a lot of them. Right, and my opinion, the best ETF to look at is actually look at ETF that tracks the index. So what actually is an index? An index is basically a basket of funds that maybe every countries or every sector will actually use it as a benchmark to track the overall performance. So like earlier, the S&P 500 actually is one of the index fund that actually uses the top 500 companies to use it as a benchmark to gauge the performance of the whole US market, right? And one of the best reasons why you should invest in an ETF that tracks the index is because of this. Even the top investor in the world, Warren Buffett, did mention this. What's happened is in 2007, he actually made a bet to invest in just the index fund alone. He can easily outperform any hedge funds in a long period of time. In this case, he made a bet of 10 years, right? So just not too long ago, in 2017, it happened. By him just investing in, just looking at that index fund alone, and with minimum monitoring, he doesn't have to do anything. Unlike a fund manager had to keep monitoring and adjusting his portfolio, Warren Buffett easily just investing in the index fund have outbid any fund manager within this 10-year period. So you can see, even as a top investor in the world, Mr. Warren Buffett have also advised that people, the best way to invest, the simplest way to invest is actually in an index fund, in an exchange traded fund. What else could be wrong, right? So as a new beginner, just take this simple advice and invest in an ETF. That's the best, right? Okay, so if you ask me which ETF to invest in, my personal opinion, follow pretty close to what Warren Buffett has said. Invest in ETFs actually track the index. So of course, mainly I will look at two economy, okay, the two largest economy in the world, because they are the economy drivers, right? So definitely the first one will be the US market. Particularly we'll be looking at the SPY, all right, which is the exchange traded fund that actually mimics the S&P 500 index, right, the top 500 companies in the United States, right? If not, you can actually look at the DIA, which actually tracks the Dow Jones index, the top 30 companies in the US market, right? Okay, and the other if you are not happy with the US market, or you find that the price of the SPY and DIA are too high, you can actually look at the next biggest, or rather the second biggest economy in the world, which is China market, right? And one particular ETF you can look at is the FXI, because they are mainly in the China large, invest in the China large cap, right? But out of these two economies, I personally more favor the SPY and the DIA itself. Why? Because I think these two ETF itself has an unfair advantage. Okay, what do I mean by that is because most of the time SPY and Dow Jones Index are being used globally as a benchmark or reference where the market moving up and down, and use it as a benchmark or reference in terms of performance. And how this index S&P 500 and the Dow Jones Index itself, the structure has been such a way that if any of the companies or fund within this basket are not performing, naturally they will be kicked out of the index, and a better performing company will be re-added in to replace them. So by that you can see the system, or rather the index itself, is already by fundamentally engineered to growing on the long run basis to actually to curb inflation. Alright, so if it's something that is so simple and has been fundamentally put in or structured to gear to perform better over the long run, isn't it even better for young investors or beginner investors like you? Because you don't have to do anything, the fund itself is structured to your advantage, right? So I just think that these two funds are no-brainers to look at because you have an unfair advantage on it. All right, so definitely these are the ones that in my opinion are the better option to choose with. But of course it doesn't come cheap as well, right? If the next alternative, you actually can look at the China FXI ETF itself. Alright, so by looking at that, just by looking at the chart itself, you can see that this is the SPY, the S&P 500 ETF, right? Has been over since day one until now. It has been on the rise over the long term. Of course, market has a cycle; it goes up and down, right? But on the long run basis, it's always going up and higher because of inflation, right? Likewise, this is for DIA, the Dow Jones Index ETF, right? It has been always geared to go higher over the long run. Right? So now we have actually found out why we need to invest, what we can invest in. So the next question is, when do we invest, right? Okay, it's very important to find out when should we invest, right? By theory, all right, as simple as logical, we know that we want to buy low and sell high. It's as simple as that, right? Okay, but the challenge will come is, how can you effectively time the market all the time? Are you able to always buy low and sell high? What I think is very unlikely, because it's been tested and proven. Even the top fund manager is never able to time the market exactly as perfectly every single time. So even the professional can't do it. So how can beginner investors like us to actually try to time the market? It will never happen. Alright. So one of the best ways actually to invest in ETF in such a method is what I call using a systematic saving approach. Alright. So the technical term, actually most people look at it, is this thing called dollar cost averaging. Alright, so I just want to make a disclaimer, this image doesn't belong to me, it actually belongs to Seeking Alpha. Alright, the credit still goes back to them for having this image on this video. It's just purely for education purposes, because I find this image is the most easiest to understand and best way to share with viewers like you to understand what it is, this term called dollar cost averaging. Alright, so basically dollar cost averaging is trying to say that you just invest on regularly over a period of time on a certain amount, alright, regardless where the market is at the point of time. Alright, so you can see right at the start, okay, for this example, let's say you invested $1,000 a month, alright, so when the market is on a high, right, you actually buy lesser shares. But when the market actually came down, you still continue to invest the same 1,000 over the regular basis. right? So when the market actually came down, you actually managed to buy more shares actually, right? So you just do it on a regular basis, just regardless of where the market is. Don't care how many shares you need to buy. Don't care whether the price of per share is it high or low. You just know that every single month this money is going to be it to buy into that ETF itself. So it just looks very similar like a regular saving plan. Alright, you just keep doing it instead of doing on the typical insurance insurance linked investment. You just do it on an ETF. Alright, so over time you will see that actually by doing this regular dollar cost averaging, alright, you actually most of the time you'll manage to get more shares and your per share average price is actually a lot lower. Right, that is one of the whole idea. Okay, right, so now we have really know how to buy, right, what to invest in, okay, when to invest in, right? So just quickly just do a summary of about the 4 steps, right? The 4 steps you actually need to get started investing as a beginner. Okay, number 1, you need to open an brokerage account. You need to open an brokerage account to actually invest in the US market if you want to invest in either the SPY or the DIA ETF or even the FXI ETF. Right, I just want to make another disclaimer. Alright, this video is not sponsored by any of the broker that I mentioned over here. It's just that one of them is the one that I use personally. The other one is I get to know of, alright, which is Think or Swim, the one that I use, right? For interactive brokers, it's just another platform that I know that there are many investors and traders uses interactive brokers because they are actually open to a lot market internationally, so most of them actually like to use that as well. If not, if you really don't want to actually get any of these 2 platforms, you can actually consult and ask your local banks whether do they have a security department. Alright, and most of the bank who actually do investment trading, they should have a security department that actually allows you to create an brokerage account with them to actually invest. Just make sure that you find the brokerage that has the best fee for you, and as well as they actually allow their platform actually invest in the US market, because you need to access to the ETF. Unless you are looking at other ETF in other countries that you think is more beneficial, then it's okay for you not to actually invest in the US market. Right, so you have to make a decision on that. But the first thing is you need to open a brokerage account. Alright, then the second step, you need to save your money. You need to save about 10 to 20% of your monthly income. Remember, this is a regular systematic saving approach method. So you need to save up your monthly income on a regular basis. Alright, once you're able to set up 10 to 20% or more, if the more you want to do it, that's better because you have more money to invest in earlier time and compound it a lot faster. If you can, I will recommend you to do so. But if not, try to keep it within at least 10 to 20%. Alright. So then step 3, you actually just need to take this money and invest and buy into that ETF of your choice regularly either on a monthly basis or on a quarterly basis. Alright. Regardless where the market is, regularly just invest in. Alright. And then finally, last step, just repeat step 2 and 3. Again and again and again until your portfolio go big enough to your goals that you want, or create enough asset to actually generate enough passive income for you that you can actually retire freely, or set you to a certain level of financial freedom that you actually can continue to pursue your passions or do something else that you like. Right? So you see, it's just very simple 4-step methods for you to actually start investing as a beginner, and no brainer, right? If you are comfortable in investing in the stock market, which is one of the market that is the easiest to invest in among the rest of the asset class. Alright, so it's pretty no-brainer. You just invest in an ETF that actually automatically, systematically, fundamentally geared and engineered to actually grow in the long run, like the SPY and DIA Dow Jones Index. Right, you can actually simply ride the wave. Alright, on the 10-year mark history, just like Warren Buffett, you are easily able to outbeat any of the fund manager who actually actively runs their asset under management, or rather their fund portfolio. Alright, I hope that you find this video useful. Alright, so if you really like this video and find that it's something that is simple to implement, simple to understand, and you would like to help any of your friends or family members or your loved ones to actually kickstart the journey, or rather at least on a basic level to understand what is investing, how to investing works, right? Please like and share this video with them, alright, because there's gonna be a lot more subset and breakdowns of different more in-depth component of investing stuff that we're gonna look at to build up your knowledge and look at other spectrum or more advanced stuff that people has been doing in investing. Thank you very much for watching this video. If you guys have any comments or any feedback about this video, please comment it below anywhere in the comment section so that I know how it is going, how can I improve on it, and we can learn from one another. Alright, I just want to value add for you more in the long run. Okay, alright, thank you very much and have a great week ahead. See ya.